What's up guys, welcome back to another video. In this video, as promised, I want to go over the backtesting session that I have done for the 4 hours 10 a.m. candle strategy that I mentioned in the previous video. If you have not watched that video, please go watch it so you can understand the foundation and how I used this strategy with this backtesting. And this, guys, like, I have done a lot of back testings before with different strategies. I was like 100% surprised from the result that I've got from this backtesting session. I got 95% win rate. I took a total of 23 trades and I got only 1 loss out of those. It's really crazy result and I was shocked by that. The average RR got affected by the last trade. I was usually aiming for 1.5 to 2 and sometimes 3, and you will see that in the video. And it's pretty crazy stats, to be honest. It's my first time. I'm not gonna lie, it's my first time I've gotten that high of a percentage. And also, guys, I want to mention that this was done over a whole month, so I'm not trying to like go over a couple days and take multiple trade setups and that would be it. No, I have done this all through one complete month, and it was kind of random month that I've chose, and it happened to be June of 2024. I want it to be a month that doesn't have any holidays in between, so that's why I chose June, and I tried it randomly. I never backtested it before, and I just wanted to see how to use and how that strategy performed in that month. And of course, guys, by all means, go ahead and backtest your own result and your own data and see for yourself if it actually works or not. I myself will try to backtest this strategy and test it in different months and different year to see if it will perform similar, if not the same. And as you can see here, I am just starting the backtesting session with a 50k account and putting in Q and ES, and just picking June, kind of random month here. And I'm going to be popping in and out, guys, to explain the setups and my reasoning for taking the setups. But other than that, most of the video is gonna be kind of silent. I have some music going on in the background. I'm not sure if it's gonna completely pick up that audio or not, but I don't want it to have it so high so I don't get a copyright strike on the YouTube channel from YouTube. So I'm gonna keep it down, and hopefully it gets picked up. It's high enough I can hear it, but I'm not sure if it's gonna be shown in that audio or that clip or not. So right here, I already set up the custom time to Silver Bullet New York time to get me right at 10 a.m. New York time, and all the time that is going to be used in this video, guys, is going to be New York time. And here's the video, the first setup here, or this is the first day. I'm just gonna let it play a little bit here. I think there is a setup here, if I'm not mistaken. Yeah, there is. So I do remember that time. So this is a setup right here. I also changed the cursor color here so you can see it properly and what I'm exactly pointing at. So right here, this red line, and that red line will refer to the 10 a.m. 4-hour open every single time. Okay, so this is the red line that I have. It's 10 a.m. 4-hour candle. That's the open range of it. And what we actually did is we kind of consolidated around that range or that level. We pushed down, and then when we pushed down, we left bearish fair value gap right here, as you can see, because the issue is I was just back testing with just having my music on, and I just was going at it. I was so focused I didn't even like highlight any levels or bullish fair value gaps, bearish fair value gaps. I kind of tended to have it plain here. So that's the bearish fair value gap that I'm talking about, and we just inversed it, and we came at this level with a strong momentum candle to the upside, and that's why I decided to take a long setup here. And you will see how I kind of managed the position as the price played out here. So I also want to mention that I try to scale at $15 or more. When the price moves at $15 or more, I try to scale half and then put my stop loss at break even, so that way it picks up that this is actually a winner, not a losing trade. I don't want to keep the price keep going and going and going, and then at the end of the day it comes back and gets me out at break even, and I don't get anything out of the market, and I keep doing that over and over and over again, to the point that it starts to mess with your psychology and your mentality and makes you get FOMO in any trade setup. So I try to wait and exactly get the good setups out of this strategy. So as you see here, so what I thought earlier is that this is the consolidation, manipulation down, and then this is the distribution of the 4-hour candle, and this is exactly what I want to get from this strategy. I want to capture all I can from the expansion of the 4-hour candle that happens at 10 a.m. New York time. So from here to here, that would be a really good expansion, but after scaling and managing my position properly, scaling, put it break even, and then eventually the price shows me that this is the actual manipulation above this line. This is the manipulation of the 4-hour candle, and then we inverse those bullish fair value gaps. That shows me, and also look at this wick respecting the open range of the 4-hour candle. So that to me shows that actually this was the manipulation up here, and this is the distribution down. So I was on the wrong side of the market, but I still kind of secured some profit because I scaled and managed my position properly. On the other side, when we came back to it, disrespected the bullish ideas. Now the market clearly shows me that the distribution of the 4-hour candle is going to be to the downside. And this is why I tried to take this trade idea and I targeted the low, and it gave me how much, I don't know. I tried to have the stop loss a little bit above here, so it's 1.28. It's a bit, the stop loss is a bit high, but I know that the momentum candle give me a lot of momentum, and I didn't want the price to retrace back here and get me out, so I didn't want to have the stop loss tight. And it ended up to be 1.47. So here you go. I want to see how the price reacting here, and as you can see, this is the same exact thing that I was talking about. The price came up here, reacted from the inversion fair value gap to the downside. So if I had marked this level with a box, you will see here this box is actually that price coming back to it, retracing to that inversion fair value gap and pushing the price lower. And by this time, I can't partial when there is kind of like a wick pullback. So I decided to partial at this level, or at this level, partial 50%, put it at break even, and I don't care about the price or the trade anymore. Whatever it wants to do, it can do. But we ended up securing that profit because we caught what? We caught the expansion of the 4-hour candle. And you will see here in a second that I keep going and playing the price a little bit more, and the price will keep dumping lower and lower a little bit more, so I could potentially have secured more. But this is what I wanted to go for. Just low-hanging fruit, whatever is visible to me, and that's it. And as you can see, I also took the news into consideration, and this red line is my 10 a.m. 4-hour candle open. So since this is a bullish candle, the open of this candle is at the bottom. And again, guys, if you have not seen my previous video about how to use this strategy, the foundation, the concept of this really good strategy, please go watch it. I'm gonna link it up on the right hand corner of the screen. You can go watch it and then come and see how I execute this concept and take these trades. So this right now is a pretty good trade. So the price pumps all the way up and manipulate. So 1 second here. So right here, this is what? Consolidation. Still in consolidation. Goes up because this red line is the open range of the 4-hour 10 a.m. candle. After the consolidation, we pumped all the way up, taking buy-side liquidity and then inversing really heavily with really momentum big candles, inversing this bullish fair value gap. So that's why I entered that trade. Price already moved more than $15, so I'm gonna go ahead and scale and put it at break even. Price ended up to be choppy. Maybe I was caught on the wrong side of the market. It's okay. That's no hard feeling about it, even if it goes run without me. So here guys, after I looked at the bigger time frame, I ended up to be bullish, and also on the smaller time frame, on the 1 minute, look what we have. So I want to verify something here or clarify something here. So you see that big pump and dump consolidation, did all of this did not mean anything. But what does make the matter very obvious here is that this line right here is the open of the 10 a.m. 4-hour candle at this level right here. This is the 10 a.m. candle, you see? And this is the open price of that 4-hour candle. Price pumps, dumps, consolidate, and then what are we ending up to do? Pushing higher. And if this price, if this fair value gap or inversion fair value gap here seems to be big for you, no problem. Look what the price amazingly does. It goes down to retrace to the bullish fair value gap and the inversion fair value gap, still respecting bullish order flow. And look what we get. We get another inversion bullish fair value gap to the upside. And this is why I decided to take that trade. And I wasn't being greedy here. I know it's kind of like close to 1-to-1. Maybe I am greedy and expanding it a little bit higher, but I was trying to target my max to be like 45 handles or 45 points or something along that line. So as you can see here, I took the loss, and it's totally fine. It ended up to be a losing trade. No problem, just go ahead to the next trading day. And I believe that's the only loss that I took. But again guys, none of the strategies, none of the concept are actually 100% win rate. So that's why when I learn something, when I try to prove to myself that maybe this work or this does not work, only one thing that stands between both of us, of me telling you the truth or whatever is wrong, is the back testing. go to your chart, go to the back testing session, and just back test it and try to prove yourself wrong or right. And this, guys, I'm using FX Replay to forward testing my strategies and concepts. And if you want to use that software, guys, I have a 15% coupon and a link down in the description below. If you want to use it, it amazingly enhances the process of the back testing or the forward testing, and at the end of the trading session it gives you an analytics for you to like understand your strength and where you lose, the good days that you're making money and the bad days that you always lose on, and stuff like that. So it's pretty nice and pretty helpful. I know most of you guys already know that software, and you can even get with my link and my code down in the description below. I think you can get a free trial for like 5 days if you haven't ever tried FX Replay. But as you can see, guys, this I've been like going through a couple days here, and I did not like how the price action is behaving, and that's why I was kind of like forwarding the price and not looking to take any trades. As you can see here, this is one of the scenarios that I talked about in the previous video. If the price keeps pumping up with no actual and true manipulation down, that means the 4-hour candle, guys, since it opened, it just pumped up and it's green with no wick. And it's very rare to see a 4-hour candle open and close with no wick from like one side or both sides, actually, right? So this is what I was going for. I see that we might have a really good push down here. And where am I targeting? I'm targeting the first target is the open range of that 4-hour candle. Okay, so I didn't like this trade right here when we inverse this bullish fair value gap with this leg, because this could easily be a retracement from to this bullish structure and then push up to these consolidation up here. So I waited a little bit more, and look what it got me. This I'm on the 1 minute here, but I'm imagining that on the 2 minutes this would be a clear bullish fair value gap that just got inversed, and it was instant inverse. Okay, and also we had like a bullish IFVG here, right? So this was bearish fair value gaps that got inversed. Now this is a long setup to here, right? But this ended up to be failing. And why? Because I was looking for shorts. I wasn't trying to long up here in premium. I was looking for short to retest from that open range of the 4-hour candle. And since it's the 4-hour candle range, open range, and the sell side liquidity is basically kind of like the same level here, and I extended it a little bit more. So you see the price was very close to taking me out here, but again, you're trying to catch that distribution phase of the 4-hour candle, and that's why it kept pushing lower and lower. So as you can see here, I kind of missed my scale down here, so I was trying to get it to this level again before I scale my profit. And it also was kind of consolidating, which I did not like. If I would have scaled down here, that would be a break-even trade, to be 100% honest, but it ended up dumping. I scaled 50% and I put my stop loss break even, and I don't care about the trade anymore. And the price, I don't remember if it takes me out or give me TP. But as you can see, price is beautifully going to that level, and it's respecting, as you can see here, guys, it's respecting that open range of the 4-hour candle, and it ended up to be a break-even trade after all, after it dumped like $40 of a move. So it's fine, no problem, no hard feelings. It was a kind of a poor management from my side, but I wanted to get the back testing and the concept to you, which is what it matters, because at the end of the day, no matter how much money you're making on the back testing software, this is actually nothing, okay? They're not paying you because it's just a simulated environment that it's back testing. So here, what am I doing and why did I decide to take a long? You see, this is NFP Friday. This is NFP Friday and this is news wick high. And whenever we have NFP or news wick high or low, we tends to go to that drawn liquidity because a lot of stops and a lot of liquidity are resting up here, or if it's a dead low, news wick low, it would be resting below that wick. But in this case, because we had a news wick high, I was bullish. Okay, so that's intraday kind of buy sentiment for the day. And why did I decided to take that long? So this is another scenario of the 4-hour candle patterns, you can call it, or behavior that the 4-hour candle likes to do, and I did discuss it in the previous video as well. Please go watch it before you continue watching this back test, and I'll link it also down in the description of this video so you can go and watch it and see what concept I am actually looking and talking about. I decided to take a long here because the open of this 4-hour candle 10 a.m. was right here, right? And look what the price is doing. It's consolidating and slash when we broke above here and we came back down here, there was no body candle closing below that level, so the price is supported by this level. And then I was looking at this bearish fair value gap that just got inversed. So by this point, at this point, I'm looking to take my long setup. As soon as I enter, price runs to the top, taking my 50%, put it break even, don't care about it anymore. And this is a $51 move, and it's 1 to, well, I don't know, it's 3 point something R, right? Ended up to be a break-even trade, and the reason for that is I want to mention something here, guys. I do have the ES 1-minute chart on top here, and the reason why this reversed on me and I did not pay attention while I was back testing, this is the news wick. This is the news wick on ES. ES already took that high. I should have gotten out of the trade. I did not see it, was not paying attention, but I figured to just mention it to you guys so you know how important SMT are. So at this point, I didn't really like the price and I wanted to go to the next day. And I'm not sure what I was doing here. Maybe yeah, okay, so here I was trying to see and look for what created that bullish move here and when did it start. And I look to the left, I see a bullish fair value gap taking a lot of sell side liquidity inside of a bullish fair value gap, inversing these two or that obvious bearish fair value gap and pushing the price higher to that high and probably that high, but I don't remember. Yep. So we just got that high as well. So I just wanted to see that in the back testing session. I wanted to confirm my idea of when we leave a wick, we usually take it the same day. And that's what I was trying to see. So once it hit, I'm moving to the next trading day. Monday no news is always choppy, so I gotta be careful here. Okay, so I think I'm gonna take a long position at this level, and the reason why I skipped that bearish fair value gap idea or that bearish trade, because someone might see this level and be like, oh, we just pumped up, inverse the bullish fair value gap to the downside, I should take a short. And that is true. You can if you want, because we're still like at this level, we're still away from the reaction level. In another word, the 10 a.m. 4-hour candle open, we're a little bit too far from it. We can take a scalp position to this level, but it's not that good RR. So you would be having your stop loss above here, or actually above this fair value gap, and it's really tiny, it's not that obvious. So I like to have it above the wick of this candle, and you would be targeting that level first, and once we reach it, you should put it at break even and probably scale, and then maybe targeting these lows at next target. But I skipped that trade altogether because the RR was not it for me. And look what the price decided to do. At this level, the price decided to have this level as a support zone and a support level of the 10 a.m. 4-hour candle, which is the power of 3 of the 10 a.m. 4-hour candle, and we just supported that level, inverse that bearish obvious fair value gap. Because if you want to compare obvious fair value gaps, take this, compare it to that, and you will find this to be obvious. We just inversed it with a really good momentum candle, so I would be looking to take a buy at this level. Okay, so I am basically combining the ICT power of 3 concept plus my entry model IFVG. It's not actually my entry model, but it just the entry that I use, the entry model that I use, and it is 1 to 2R here. And I was trying to target a little bit higher, but I didn't want to be greedy, so I put it lower, if you did not see that. So here's the IFVG, and here's the trade idea. The price moved a little bit here, and that's $17 of a price movement. Here's my 50%, here's the scale, here's the break even. Don't care about this trade anymore. Okay, guys? And the price decided to expand to that drawn liquidity, which is higher, and it even got me the previous level that I was looking for. And here's me checking, trying to see if it got actually the level above there, and it ended up taking it. You see, and this is what I was trying to target before, but I lowered it down to not be greedy, but it ended up to be hitting. Why? Because you're catching the expansion of the power of 3 10 a.m. 4-hour candle. So this is a really good example, guys, of the other scenario of pumping, and then not getting even a manipulation down below that level where the 4-hour candle opened. Okay, so if you did miss the pump, that is totally fine. What will the 4-hour candle kind of do? It will really, most of the time, will create a market maker buy model and then sell model. And this was on this curve, on this side of the curve, I was waiting for a sell model confirmation. So here, the first retracement, I don't trust it because it can be a retracement to the bullish structure and then go down. But when we are at this level here and then push down, what is this telling me? This is telling me that this is the change of market structure direction and change of the market direction. We went up, and here at this point we switched direction from respecting order flow, from disrespecting bullish order flow up here and respecting bearish order flow. And if you actually see here, you will see that all the bullish PDAs are getting disrespected. That bullish order block got heavily disrespected and acted as a breaker. We went up here to trade to it, and we're pushing down. And here we had two bullish fair value gaps that on the 2 minutes would be maybe 1, but I know the drawn liquidity is lower because we never actually manipulated below that level. We did kind of with a small wick, but that's a really small wick. Okay, so I wanted to see a retrace to that level again. And that's what I was targeting. Stop loss would be at the high. Targeting first thing is the open range of that candle. And here's my trade. And look at this beautiful move as soon as I enter. Why is that? Because like the 4-hour candle needs to retrace to that level, even if we're bullish or bearish. And even if I got stopped out at break even here, I wouldn't care because I already scaled. I took profit, but this is just an extended run that I wanted the price to see. I want to see the price run to that, but here you see the price already moved $38.50 of a price movement. So this was actually Wednesday. Yeah, we had CPI. So as you can see here, we were too high in premium. If I go back here, we were too high in premium for my liking to take any long idea. Right here, we were too high in premium, so I was trying to take a short down here. And that's why I kept playing price and did not like it. But eventually the price found this level to be a support. We inverse those bearish fair value gaps and the price pushing higher. Okay. And by that time, really late in the session, I am an AM trader. I like to take my trades from 9:30 market open until maybe 11 or 11:30 by max. And also the price was acting pretty bad here, so that's why I kind of probably would skip it here. I don't remember what I did, but I should skip it here. So as you can see, guys, I looked to my left and I saw a lot of sell side liquidities to be resting below a lot of these wicks. So this was kind of a risky trade, to be honest, because when the price came around that level, we didn't see a body closure below that level, but I had conviction of that trade, and that the price is moving lower. And that's why I took it. And as soon as I jumped in and kind of retraced to that inversion fair value gap, we pushed down, took my scale, and I put my break even stop, and I don't care about the trade anymore. We ended up taking all of this sell side liquidity because we had a lot of them and a lot of obvious wicks, and that's why I took that trade. It was pretty awesome trade. I don't know how the RR on that. And we even kept the dumping a little bit lower. So I just wanted to confirm that. So yeah, going to the next day here. So right here, guys, I want to mention this, although I did not take it, that's the same thing. Kept the dumping here. It found a really good support level from this order block, and we inverse this bearish fair value gap, giving us an inversion, bullish inversion here. And the first thing you would be targeting is the open range, and then probably this high. Okay. So here, what I'm doing here, and what I found is I found that the price, when it came up here, it found the open range of that 4-hour candle to be a resistance to the price, and look what we get from there. We get a bearish IFVG to the downside, inversing all of these bullish gaps. That's why I decided to take that trade, and we have a lot of sell side liquidity resting here, and we had a consolidation here. Yep, so that's pretty good level to target. It was 1.79, and I took that trade. Once it moves more than 15 bucks, take some partial, 50% off, put it as stop loss at break even, and I don't care about the trade anymore. So it ended up coming back to me. It did move quite a bit, but this is what I was going for, and it ended up not working as I expected, but I did take some partial, so it's not a losing trade altogether. So you see here with the previous candle, I was not interested. Why? Because it kind of respected that open range of the 4-hour 10 a.m. candle, right? We don't know if we're gonna consolidate, push up or push down or whatever, but with the next candle it pushed down. Now I was interested in taking a short position. Okay, the only thing that I was worried about, that this might be a retracement to this IFVG or the bullish fair value gap. So I don't remember if I take this trade or not, but I can take that trade, and once it moves a little bit more, I can like inside of this, to retrace a little bit deeper in this IFVG, I can eventually put it at break even and protect myself. So that's probably what I'm doing here. Above this high, the stop loss, and eventually the ultimate target would be that low. And I look to the left and I see a big gap, and I was like, what the heck is that? But anyways, respecting how you manage the trade and all of that, once it moves more than 15 bucks, I should put it at break even, and then eventually put my stop loss at break even, and that's it. So as you can see here, guys, the price already moved more than 15 bucks. So I'm gonna go ahead and let a couple more candles to play out to get it in a plus what is it called, a plus balance here, or a plus level where that trade is in plus here, and I'll take my partial and put my stop loss at break even, and I won't care about the trade anymore. So I get stopped out, but this should be lifetime trade. Live trading will be a partial and then break even, partial in half at the $15 level, and that's it. And look now what we kind of get. The price pushes pretty strong and with really good momentum to the upside, and to me this looks like what we moved up and then down, we reacted from this IFVG, like I said, and then we inversed this bearish fair value gaps, returning them into bullish IFVG. So, and that was above the range of the range level of the 10 a.m. 4-hour candle. So I was ready to take a buy at that level for that reason, because now the distribution should be on the top of that level, so on the upside, not the downside, and it's pretty easy to predict. Okay, so after it moves more than 15 bucks, same exact thing, scale, and then put it at break even, my stop at break even, and then I don't care about the trade anymore, right? And here you go, you see the TP hitting $50 of a move, and we go to the next trading day. We don't need anything from that trading day anymore. So you see my immediate reaction once I saw those bearish candles. Price moves up, then move down towards that level with big momentum candles to the downside. So what am I doing? I'm taking a short. So I am expecting the distribution side of that 4-hour candle should be to the downside. Price moves to my first TP, which is $15 of partial, put it at break even, take 50% out, and I get stopped at break even. But look how choppy it's delivering, but it ended up working to my full TP if I didn't put at break even. It depends on every one's conviction, but I honestly want to keep myself safe. I want to take partials and stay on the good side of the market of being green, so it doesn't affect my psychology too much. That's why I scale at 15 or more, plus putting my stop loss at break even. As you can see, that day was a bank holiday. I skipped it, and this is Thursday now for us to trade and doing the same exact thing. So as you see here, I'm not really like, I have a hesitation that I'm not really fully trusting this, because that's after the first dip. We got a long setup up down here, and I wasn't honestly trusting the setup. That's why I did not take it. Ended up to be working halfway. I don't know if it continues or not, but that's totally fine. I kept moving forward because that's not a trade that I would have taken anyway, and I ended up skipping the whole day altogether. So with this also, with this same trade, I was a bit hesitant into taking that trade idea because we're kind of respecting the open range of the 10 a.m. 4-hour candle. To be honest, I would have taken this trade. So yeah, okay, so I take this trade and just keep looking at the price to see if it pushes a little bit down, like more than $15, I take partial and then I put it at break even. And as you can see, the price already moves $15, so I put it in a positive balance. I scale, I put break even, and then I leave it alone. But you see how the price reacting. This is not a really good setup, but I was trading what I see, and it's not a good setup because the price was reacting around the open range level, and did not know if we're going up or down. But here I see this bearish fair value gap and we inverse it. I was kind of ready to take a buy from here because we found this level to be a support price. I ended up not wanting to take the trade up here because that bearish fair value gap was not that obvious, and look what it got me. It got me something more better. So I did not even move my box. I just put my stop loss as is, just put my TP, get in a long position, market fill, and look at this beautiful distribution to the upside. I'm gonna go ahead and take a scale here and then move stop loss to break even. Don't care about the trade anymore. We should keep pumping here, honestly, to the buy side liquidity. But even if I did get stopped at a break even, I don't care about it. You know, the price moved 43 bucks. That's fine, no big deal. On a live environment, I'm pretty sure you would have maybe scaled a second time or a third time, right? But we're back testing the concept here. That's why I wasn't worrying too much about, I didn't get the full move or whatever. And I'm pretty sure maybe there's like an SMT here, right? So let's see if there is an SMT or not, actually. So right here between that high and that high, I can't tell. So this high maybe around the 930 was right here. Yeah, actually there was an SMT. So this was like right around let's say 930. So it was like up here, and this one we already took that one. So this was right before 930. Let's call it 920. So 920 was somewhere around here, right? And we already took that, so that's probably why it failed and reversed on us. That's totally fine, right? So that's the second day here. It's a Monday. I see, like, okay, so the reason for me to take that trade is we had from this level to down here, we had some room to go, right? So I decided to take a short position since we're already up here in premium, and I wanted to trade what I see. Of course, it's a risky trade. You don't need to take that trade because we never closed below and we never had clean inversion fair value gap or whatever. But I decided to take it, take a little bit of a scale, and then put it at break even. Maybe it will work. So right here with that wick, it already moved to $21. Take a scale, put it at break even. Don't care about the trade anymore, and probably I'll get stop loss at break even or take profit. We don't care, right? At this point, you don't care. So that ended up to be a win, working into our favor. Even though, so I want to see something here, guys. Here's the level. So I want to pause here. Oh, I messed it up. Hold on one second. I'm sorry, guys. So yep, it was this one, and then I went back to it. So let me see here. I want to point out something here. So even if you don't want to get on where I got in right here, right? If you want to like get a good clean fair value gap or inversion fair value gap to the downside, if you still think that the price should move lower, you look at here, up here, and see that this is kind of like a consolidation. Price is resisting to go down, and then we finally broke it. We found that to be resistance, right? Resistance level here at that 4-hour candle open, and then we move down. It's not really that clean from down here, but I'm just letting you know that after we broke it, we found this level to be a resistance and pushing the price lower and lower, and you can even get target lower and lower prices, right? And you could have probably waited for the retracement to come back up here to get closer to that resistance level of the 10 a.m. 4-hour candle open, and look at this like big bearish candle that inverts that obvious bullish fair value gap. You would take the trade from here, target that low, would be a nice RR. So here, guys, I want to point out this trade idea. This trade idea is pretty good, right? What do? Push higher and higher without any setup to go higher. So when we do that, I'm looking for short idea to retrace to that open range level. I see bullish fair value gap got inversed. I'm taking my trade entry from there, and eventually I can even target that low-hanging fruit of that sell side liquidity, but the first target needs to be the open range. Okay, first target needs to be the open range. As you can see, that already moved about 19 bucks. I'm taking my scale and I don't care about the trade anymore. Although it's not the right amount of money for the scale, but I don't care. I'm just back testing, okay? I'm not looking to take the exact amount of scale every time. I'm just trying to stay true to stats when I should be taking a win for when I scale out of a trade, and when should I be taking a loss. I would take the loss and keep going, right? So I need to stay true to the stats, and that's what I was trying to do and make sure that I keep on doing during this backtesting video. So you see, I am trying to take that trade, and the reason for that is we see on the left here we have a lot of sell side liquidity and what we call a low resistance liquidity run on the way down, right? So because I see that, what got to my head and what I am imagining that that retracement down a little bit was a manipulation of the 4-hour candle right here. Manipulation of the 4-hour candle. We just wicked it down, right? And we found a support level of the bullish fair value gap that's supporting the price higher, and then we inverse that bearish fair value gap. So at least if this is incorrect, at least we're working to this equal high up here. So that's why I tried to take that trade. And as you can see, once we took out that equal high, I'm gonna try to scale and put my stop loss at break even, and I don't care about the trade anymore, right? It ends up taking me out, and I don't, at this point I don't know where we're going. So as you can see, hold on, as you can see, this was a beautiful trade entry to the short to the short side if I would have waited and did not make the price go fast here. So this right here, this bearish fair value, that bullish fair value gap that got inversed, this was a really nice short from here. And once we reach the level or the open range of the 4-hour candle, we can put it at break even and forget about it, right? So I was kind of like mentioning that this was a really good short, but I missed it because I moved it too fast and made it go forward too fast. So right here, I tried to take a long again. And why is that? Because when we moved down lower to retest from the open range of the 10 a.m. 4-hour candle, we came back here and retest from that level. It doesn't need to be perfect on the line or not, but we quickly inversed back to be green, for the 4-hour candle to be green. We stayed above that level, and when we came back to it, we inversed that bearish fair value gap, and when we came back to it, we found that level to be a support to the price and supported the price to go higher. And we had a bearish fair value gap here that got inversed as well. So I was ready to take a buy from this side or from this level, you know. So I'm gonna put my order here and manage my position as we go. It moved 15 bucks or more, I take my scale, put it break even, don't care about it anymore. So this is how you can stay true to your trading plan and don't mess it up, because you never know what the market wants to do or wants to go for. Take what's obvious, what's presented to you, and just get out of the market. Just let it, if you want to let it run, but you should be taking what's safe and then let the runners run. So here, I'm pretty sure I was not trying to take a trade here, but I put my tool to let you know that it might be going for that level up there, but stop loss would be huge. And yeah, so I let it run, I took it off, but look what we get, okay? Look what we will get right now. We found support from that level again, so that level is showing me support to the price, okay? At this point it's showing support, but now I'm taking a short. Why? Because look at this, we went up and we changed order flow around this area from bullish to bearish, respected bearish order flow, and I was focusing on these two bullish fair value gaps. I could have taken it here on this inversion, but it was not obvious because like we can quickly retrace and wick out that open range of the 4-hour candle level and then move higher. But I waited a little bit more to this full candle closure behind below these bullish fair value gaps, and I took my trade. And what you like, don't you like look at this, like guys, like the price, like oh my god, it was like so close on taking me out, but I ended up taking my scale, putting stop loss at break even, and even taking my full TP of $48 of a move, 1.88 RR, which is really good and really satisfying to see the market work in your favor. As long as we're targeting that distribution phase of the 4-hour 10 a.m. candle, we should be fine. And that's why most of the trade setups you see, they work pretty beautifully, and I was actually surprised. I'm going to start back testing this strategy and concept a little bit more for my myself and to see the performance with my own eyes, and I suggest you guys to do the same. As you can see here, we pumped all the way higher. So what does that tell us? That tells us that we're coming back again to retrace somehow to that level, and we did exactly that. But on the way down, when we switched order flow, did we have any clean setup? We did not. That's why I did not take any trade, right? So I did not like how we were like pumping and dumping with no reasons. I went to the next trading day. So as you can see, what did we do? We pumped with no reason. We didn't even have a wick down here below that level. We came back with big momentum to the downside, so that is the trigger for my short entry, taking my stop loss up there, and then taking my TP as probably $45 or so, or 1 to 1.5. It really depends on you guys and your conviction, and that's what I was trying to go for. I was trying to get it to 1.15, and then I'll let it run here. So as soon as I get in, the price moved $31 of price movement, taking my 50% off, putting it at break even, and taking my full TP like butter. Just like butter, guys. It just like so satisfying. I don't know what I was doing here, so maybe I'll forward it a little bit here. Probably I went to get something, I don't know, and I came back. I did not want to take any other trades, because once you secure one beautiful trade for the day, you should shut off the chart, get out of it, and that's exactly what I did. But because we're in the backtesting software, we have the beautiful feature of moving to the next day, which you can't not do in a live environment. And also, guys, I want to mention something. When you're backtesting, please do not speed run your backtesting just to get data, okay? Think about the trades, think about the strategy, think about the drawn liquidity, and give it time as if you are doing it in a live market. As you can see here, moved down, consolidating, found this level to be resistance, moved lower. We had no setups to take a short down here. We come back all the way up here, inversing this bearish fair value gap and this bearish fair value gap, and coming with a full candle to close above. So in my mind, guys, in my mind, I am thinking about the 4-hour candle. When it was up here, it was green. When it was down here, it was black or bearish, right? And then we moved because the price level moved above the open range. So now it's back to green, and we inversed the bearish fair value gap. So that, what is that telling me? Time for take a long setup, okay? I just changed that song so I don't get copyrighted. Which I'm pretty sure I will get copyrighted because it was playing for a bit, but I did not recognize that. So once I entered, price started chopping. Price already moved more than 20 bucks, taking my stop loss break even, taking my 50% scale. Unfortunately got stopped out, no biggie. Playing price again, and I had conviction with this trade. So this was not really like, I wanted to say something, guys. This was not really a good trade, right? But it had an idea behind it and confluences behind it. So this level right here, this red line, is the open range of the 4-hour candle. It's the same, like the price came back and reacted from that same level inside of a bullish fair value gap, taking sell side liquidity, inversing what is going to be a bearish fair value gap 100% sure on a 30 seconds chart. So that to me looks like, okay, this is the drawn liquidity is going higher. Like you see, it's a negative RR, but this was what should, like, your stop loss be. Your stop loss should be below that fair value gap. We came back to it, back lower, retraced to it again, and then we're pumping up. And with this one, the RR was 0.7, so that's what kind of messed up my RR for the testing. But I did not scale anything, and I let it go to TP here. I think it was 30 bucks of all together. I also extended it to $45 to see, or to 1-to-1 to see if this would actually hit or not. And it will end up hitting, I believe, but it just like really brutally retracing bad here and giving you your TP. And this is the final trading day that was back tested. Pretty impressive analysis and pretty impressive analytics and stats from that back testing session. I'm like really proud of myself for that back testing session. I took my time, did not rush anything. What a beautiful back testing session. I would love to do something like that on a live YouTube session with you guys, but I need to sharpen my knife a little bit more to get more confident and more comfortable. So please, if you're watching this, go ahead and backtest your own data, and let me know down in the comments below how well it did. And if you want to talk a little bit more about the strategy to me, or if you have any questions, let me know down in the description, in the comments below, I'm sorry, or come talk to me in the Discord. It's free to join. You can come, leave your question or talk to me. I'll respond to you right away whenever I get the chance to. But basically, guys, 95% 0.6, man. What a strategy. What a back testing session. Really proud of myself. It's even like for a full month. I'm not trying to trick you and tell you, oh, was like I took a couple of plays or like 10 trades and only traded like a week worth of trading, and this is the stats and whatever. No, this is a full freaking month, baby. And basically, guys, that's it for the video. If you enjoyed that video, make sure to like, subscribe to the channel so you are notified if I do a live session of this strategy to backtest this strategy in front of you. And that's all for today's video, guys. Thank you all so much for watching. Like and subscribe, and I'll see you in the next one. Peace.